Check testing, check test. If y'all can hear me, say what's up. Looks like some people starting to roll in. Yo, yo, yo. How's it going, Market Moves? Happy Friday. If you got the Friday vibes, say what up. I'm feeling extra nice on this Friday today, so give it a couple more minutes, let everybody show up. Cool, we'll give it like 2 more minutes, guys. Just a little bit more patience, and then we'll be ready to go. Hope everybody's doing good today. There was a lot of good plays today, across the board, long side and short side. And that usually doesn't happen, so take your wins where you can catch them. How's everybody doing? Almost a weekend. Getting there. Okay. At this point, I'm going to just go ahead and give you guys a breakdown of what you guys can expect here today. So, this stream, we're going to focus on a couple different things. The main focus here that I want you guys to take out of this today is supply and demand. What does it mean? How can you use it to your advantage, right? And then how to take this theory and then apply it by updating your charting skills and changing the way that you look at charts to become a better trader, right? So that's the goal of this stream. So with that being said, it's 10 o'clock. It's game time. Let's get started. Okay. So I basically want to start off this stream going over the theory of this so you guys can understand how this thought process works and how to get your brain kind of wired to think this way. So, in order to do that, I kind of created a short little presentation here that I'm going to pull up now. And we're just going to talk it through and just follow along with me. Cool. Okay, so here's our little presentation. It's literally 2 slides. It's very short because I'm just going to talk through. I don't like to have like all of these crazy presentations. I want you guys listening to me, not reading what's on the screen, right? So let's just talk this stuff through. Right? Okay. So the main idea of this theory, or the question that we're trying to answer here, is how or why does a stock move up or down, right? So we're looking at our charts all day long, and we're always wondering, is it going to go up? Is it going to go down? Is it going to go sideways? Is it consolidating? Is it due for a breakout? Is it breaking down? What's going on here, right? So that's the goal that we're trying to figure out. We want to know how or why does a stock move up or down, right? So here's the basic thought, right? We're in the stock market, correct? So being in the stock market, there's a bunch of transactions going on in any given time for these underlying assets, correct? So if I'm buying Microsoft, there's a transaction going on between me, the buyer, and somebody else, the seller, for me to purchase those shares of Microsoft, because that's something that I'm interested in purchasing, okay? So the main idea here is that for every seller, right, there needs to be a buyer willing to pay that price for the underlying asset. So the market moves in the course of supply and demand, meaning that however this supply and demand is structured is what is going to control the price action. Okay? So, take this thought and now elaborate it to the next step. Right? So, actually, I'm going to delete this one. That's on the next slide. Okay. So, now, I want you guys to take this supply and demand theory of buyers and sellers transacting, right? For the asset, and now elaborate on it and move forward. So, if you have a balanced market, what a balanced market means is that there are buyers and sellers agreeing on the price, which means that in order for the transaction to occur, right, I have to agree with you that whatever I'm willing to pay is what you're willing to sell it for. So if we are not in agreement on that, those orders aren't going to get filled, which means there's going to be no transactions taking place. So when you have consolidation, right, a lot of people view consolidation as a bad thing, right? You see consolidation on a chart and your immediate thought is, oh man, I can't play this. This is going to go sideways. This is a horrible stock to play. I don't want to touch it, right? But maybe that's not the thought that you need to be having here. Because consolidation actually signifies that there is agreement on the buying and the selling side, and it creates, therefore, the liquidity, right? The actual transaction, the volume, meaning that the stock now has actual volume coming through because shares are being traded, and then the consolidation is what you see on the chart. So all of that consolidation action, when a stock gets very, very tight like that, what you're witnessing, what you're actually watching, are the buyers and sellers agreeing on price. Now, what you would think, right, is that logically, consolidation should be stable, right? Meaning that if buyers and sellers agree on price and we're continuing to have volume come through, that there's going to be stability in there, right? Now, that stability can only hold for a certain amount of time. And eventually what's going to happen is you're going to get what's called an imbalance. So in an imbalanced market, the buyers and the sellers do not agree on the price. So in this particular case, now, all of a sudden, I want to buy Microsoft for $110, let's just say. I'm just making these numbers up. And all of a sudden, I was able to buy it for $110, but now nobody wants to sell it to me anymore for anything less than $120. So, in this particular case, there's a bunch of people lined up in demand, right, at 110, but nobody wants to sell it there. So now you have an imbalance. So what does this cause, right? When this happens, it creates an illiquid area of price because the order flow is now in favor of the buyers or sellers. And this is what you see as either a rally, right, in the stock price, or a drop off of a high. So now take it again and elaborate it. So if supply is greater than demand, you will have a massive drop imbalance, and there will be unfilled orders sitting at the origin location that did not get filled since the price fell too fast. So think about it. Have you ever been trading, right, and you see a stock is consolidating, and you're like, yes, now is the perfect time to get into the option. Like, I want to get in, but you don't pull the trigger, right? And then all of a sudden, the stock drops $3. And you're like, damn, I missed it. Right? So what is your immediate thought? You're like, oh, I'm going to set my limit order for when the stock comes back to that point where I missed it at, and that's where I want to get filled. And then you're going to sit there and you're going to wait with your order to get filled at that spot where you missed it because it went without you, right? Now, you're not the only person that happens to, right? There are many people in the market, right? So when your order doesn't get filled, now think of it this way. The institutions also didn't get filled. So what are the institutions doing? They're doing the same thing you're doing. They didn't get filled at that spot, so now they're going to sit there and they're going to wait until the price comes back to that balanced area so that their orders get filled, and then they can continue for a leg higher or move lower. And so if you're the institution, right, acting smartly, acting correctly, if you're waiting for your order to get filled down there, the retail traders are going to be providing the liquidity for you in that demand zone. And in the supply zone, the retail traders are going to be providing you liquidity as an institution by filling your orders that are sitting up there waiting to sell in the supply zone. Okay? So, balanced market, agreeing on price. Equilibrium, liquidity, volume, consolidation. Imbalance, not agreeing on price. Demand exceeds supply or supply exceeds demand. Illiquid, no volume, low liquidity, rally. Okay? Or a drop. So, now, next slide. Who controls the market, right? Retail or institutional trading? You know, it's funny, like when some of you guys in the group ask me if we pump a stock, or like if we have the power to like move a stock, or like all of that crazy nonsense. And you know, like buying one option contract or even 10, 20 options contracts does absolutely nothing. Buying hundreds of shares does absolutely nothing. Your mom and pop average retail does absolutely nothing to the market. When you see a stock moving, especially like moving in heavy increments, that is institutions. That is the only people that have the power and the money, right? The capital to make that move and that stock happen. Not you. Okay? So stop thinking that you're so powerful and that like all of this stuff that you do, it means nothing. Okay? Unless you got a Ferna number and you got a couple 100,000 or more, you know, in these orders that are going through, then you're not moving anything. Okay? So, when you see a stock rally or drop hard, that's not retail. That's institutions taking action. And when you see that, that should be a flag as to where the stock's going to go next. Because who's in control? The institutions are in control. Right? So, now, thinking like an institution using supply and demand strategy. Here we go, guys. Ready? So I'm going to take a couple of my charts and I'm going to show you now how you can use this strategy to look at charts, right, and candles and price action and consolidation and drops and, you know, rallies to figure out where these zones exist that the institutions are waiting to get filled in, so that you can be the one to get filled with the institutions at the right time, at the cheapest price, for the max return. Make sense? Cool. So, I'm going to pick a less complicated chart. Okay. I find that this works best on a 4-hour or a 1-hour chart because the candles give you very clear indications as to when these consolidations and drops are occurring. So if I go to a 4-hour chart on BIIB, okay? So this stock, BIIB, Biogen. So I have a couple boxes here marked on this chart. And they're a bunch of different colors, and I'm going to explain to you guys what they mean and where I came up with them from. And we're going to use the same strategy to figure this out. So check this out. Ready? This green box here, right? I've marked it green. The question is, why? I'm going to zoom in now because I don't really see it on my 4 hours, so I'm going to now double check on my 1 hour. Okay. Do you guys see this giant spike right here? This was from earnings. So this massive spike was right after they reported. And it hit like $300. Almost. So, if you look, it was kind of like consolidating here in this period. Monday, Tuesday, Wednesday, and then boom, pop, right after earnings. See that? So now, we need to figure out, using supply and demand theory, where are the institutions waiting to get filled on Biogen. So, there was consolidation, which means that there was agreement here on Monday through Wednesday of the price of Biogen to be $270-ish. Now, all of a sudden, they come out with earnings, and all the institutions that wanted to get positions in Biogen completely missed it. It's all the way up here now. So, guess what? Everybody, the institutions that got filled up here, what are they going to do when it spikes up to 300 the next day? They're going to sell the living crap out of it. Right? So, look, whoosh, here, down it comes. And it's going to fake you out with all these little bounces and these little spikes. But look where it wants to come back to. It's waiting to come over here, right? This is where they're waiting to get filled, right here. So the way to figure that out is to go to the consolidation period and find this last red candle. You guys see this last red candle here? If I zoom in on it, you're going to be able to see it perfectly. Come on, come back. This last red candle right here, this bad boy. You see that? This was your last chance. This is what we call the OF candle. Because as soon as this candle's gone, OF. Oops, I missed it. So, guess what? This is your golden ticket. Right here. The consolidation ends, and boom, it's gone. Now, they're all waiting right here. In this candle. From top to bottom. You literally take the box, and you draw the box from the very, very bottom of this candle to the very, very top. Include the wicks, all of it. And now you have yourself a demand zone, which I've marked here in green. So, you guys following me so far? I'm going to check the chat. You guys following this so far? Okay, nobody's saying anything, so I guess we're good. So, back to this. This last red candle is now your demand zone. Okay? So, because I'm on a 1 hour chart, that means that there's an hour demand, right? An hourly demand zone here in this 268 to 270 range. So this is where you want to go long on Biogen. Okay? This is your sweet spot. This is your entry. Right here. Now, if I zoom out on Biogen, you're going to look. You see how this is a magnet? It faked it out. It tried to, stage another rally. And it didn't quite get up here. And then next time it tanked, it didn't, not touch it. It came right exactly into it and then bounced right off. And then it came into it again and bounced off. And this time it's making a lower high and it's continuing to come down. So guess what? My next thought is it's going to break this box and it's going to come down to this yellow box. But we'll get to that after. So now that we figured out the demand box, let's figure out the supply box. Right? So, gonna look at this orange box up here. Right? This is what I call the mega supply zone. Because look at the magnitude of this move from down here. See that? That's a huge move down. So from like 292-ish up here to the swing low down there of like 270, that's a 20-point move. It's pretty big. And again, these moves are relative on scale to the stock that you're looking at. So if it's, like CGC, you're talking 25 cents. But if we're talking Biogen, 20 points. Okay? So, Biogen, here, check this out. there is a huge move to the upside, right? And then you have this base out period where it like reaches its top, right? And then it comes down like this. So this right here, these candles should be the relative demand, supply zone for Biogen, because look, here it came up here, it finally got up here, it squeezed itself, there was all these orders getting filled, right? Everybody's happy, and now it's gone. And now everybody that wanted to sell it up here has to wait. So they're just going to sit here and they're going to wait. But look at what's happening, right? So you'll see, as this stock is going down, look, this supply zone is sitting here. These guys never got filled. Price came down and down and down and down and down. Then the next day comes along, and check this out. It tries to make a new high here, this candle, and then gets crushed again. So that's a new supply box. That means there was more sellers than buyers, and it pushed it all the way down again. See that? So this is now another supply zone. But this supply zone up here never even got touched. So these people are still waiting here. And these people are waiting over here now. So guess what? Now you have to knock out these people and these people. Uh-oh. That sounds kind of difficult. This stock looks to me in a clear downtrend. Making lower highs. And look, it's tested this zone once, twice. Right? And now again, the way that you follow the theory is the more that you continue to test a zone, you're going to knock out the people that are in the zone, and the zone gets weaker. So every time that this dips down here and these buy orders get filled, there's less buy orders waiting to get filled the second time. So the second time it comes lower. You see this? First time it's up here. Second time, not so much. Third time it's going to crack through this box and it's going to go down here. So now I was like, okay, so I've got this box, but what if this box fails? Where's the next target, right? Where is the next spot, magnet, demand zone waiting to get filled? So in order to find it, you have to go back, right? This 1 hour chart was not enough. You have to go to the 4 hour chart. And now, if you look in the beginning of June, do you see, or end of June, do you see this consolidation right here? It's like boom, 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 nothing, 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 bam. This rally right here, this mini one, not this giant one like this, but this mini one is still good enough, right? That's the next zone. So that last candle here in the middle of June, or end of June right here, this last red candle here before it starts to do this, that's your next demand zone. Waiting down here. So to give you guys an example of how you use this in a trade, SE, Monday, Ranger, hits me up. He's like, SE, I like to go along here. What's my thought? I go to my chart, right? And now, the idea is if you do this on the longer time frame, the smaller time frame is going to confirm this. So if I go to the 5-minute chart, you're going to see it's going to come into this box and then get destroyed. It's going to come into this box and it's going to rally out of the box. Right? So this is your long. This is your stop loss. Anywhere in here is good to enter. Up here, where you want to sell. Anything in here, we don't care. Anything in the middle of these boxes is just noise. It's just nonsense. This is where the retail traders are trading. This is where we want to be. This is your entry. This is your exit. Somewhere in here. If you want to be safer, go out here. If you want to be a little bit greedier, go out there. But, you know, eventually it only hit here. So you really should have sold probably somewhere over here. 123 SE. So when I'm charting this, right, And I'm looking at this on Monday. If we go back to Monday, and it's pre-market, and I see that SE did this on Friday, it bounced to the very bottom of the box, and then came up back here, coming around Monday, right? So by the time we hit Monday pre-market, we're over here, edging towards the top of the box, with all green candles, trending above VWAP, right? Again, VWAP, trending above, looks great. So yeah, I want to go long here, of course. I want to go long right the hell there. Right it open. And I'm not scared at all. I don't care if the market's bullish. I don't care if the market's bearish. I mean, I do care, right? I mean, you always got to follow the market. You got to be able to follow the market. But in the same token, look at that. This stock is doing its thing. It doesn't care. It's just going, right? So I'm going to go long here. And I'm going to set my stop loss down there. And as long as we don't come down here, I'm good. As long as I see this and I'm coming out of the box, this is confirming that my box is correct. This is confirming that there is demand down here, that people are buying it, that it's moving up, and that its next target is in this supply zone here. Okay? So, back to more of my charts. When you guys are all like, oh, RST, every 10 minutes, like, check this out. I've already established this demand zone here from 2393-ish all the way up to 2536. So this is the demand where the last rally was sparked for Rosetta Stone, all the way up here to 2897. And since then, it's pulled back multiple times into this box. 1, 2, 3. But this box is holding strong. Look, it hit the very, very tippy top of the box, and it ran up. And then it came back down all the way to the bottom of the box, and now it's coming back up again. And then this time it came back kind of like towards the top middle-ish of the box, and it's going back up off the box again. So what this signifies to me is that this is confirming heavy demand down here. That every time it continues to come down here, it's just pushing itself back up. So it doesn't want to go down here. But my stop loss on my call is here, $24. If we go below $24, I'm going to get nervous. That's when I'm scared now on my play, right? So when you guys are freaking out every 5 minutes about it going up, it going down, no, right? Until we break this, no reason to worry. This is my target of sellers that we need to break. If we break these guys, next move up. And since there's nothing up here, there's no transactions up here, there's nowhere to determine where the next sellers are going to be. That's what the Fibonacci retracements are for. Because once you break the all-time high, that's it. There's no more sellers. Like, they just decide what they are going to ask you for it, right? So, there's that. Church and Dwight, right? So, again, you can use this on even the tiniest of time frames, right? On a 1 minute time frame, Chad, right, this morning, I was literally following it along on a 1 minute chart to confirm that this stock wasn't going to go against me, right? So, the way that I charted it, right, was here's my pre-market high, 94.25. I wanted to see that get broken to confirm that this stock was going to continue higher. So, I saw it pull back at open. I didn't buy it. It came up here. It tested the pre-market high and turned it into support. So I entered my call like right about here-ish. Like right above it. Okay? And now I see that happen. And look, sure enough, freaking turned into a supply zone on me and I got upset. So I noticed that there was this pullback coming off of like the top here. So I marked this as a supply zone. But then I noticed at the beginning of this rally here was this last green candle on the 1 minute chart. And then look, so look, it's pulling back every minute, just coming back into this demand zone box. This minute long demand zone. It hits it, it comes in it, it bounces off again. Alright, cool. So now it's going to keep going. So, here, look. Here starts a second rally. and then it stops here. So now you have a new demand zone here. This one's higher than this one. That's the key. You want these to keep moving up and up, and then it comes back and it retests this demand zone, and it's like, yes, I like this. And now VWAP is over here too, and they're like, yeah, we're hanging out together, VWAP and demand. That's even better. Okay, so now it's going to come down and it's going to, like try and break through, and then it's going to come back up. You know what I mean? So this is what's been happening in the last hour or so. So this looks to be the new supply zone around here in the 96 area almost, and then it's forming this support back from down here. This is the old support zone here. You see this? We're basically almost riding the top of the box from earlier. So it broke this box, but it's still holding this box. So that's okay. It doesn't have to fucking fly, excuse my French, but we'll take it. On a long swing that's expiring in 3 weeks, why are you stressed? This looks pretty good to me. So, that is my half-hour spiel on supply and demand, and how to use it, how to think and act like an institution, right? With the supply and demand. So that you get filled, not here buying a call, right? No. If you do this correctly, what you should do is by looking at this on any time frame and any chart, and like again, so if you're a swing trader, right, you can use this on the daily. It's gonna work. Again, longer time frames, use the smaller time frames to confirm, right? So longer time frames more stable than shorter time frames, and also of course the more recent it is, right? So if I go back to this, did I mark the, where's the, no, sorry. If I go back to this one, BIIB, right? This demand zone is fresher, it's newer, so it's stronger, or it should be, than this one, this yellow one. Does that make sense? Because this is newer. So this is more recent, so that means this is like, a stronger level. So that's my spiel. So now I'm gonna let the last half hour be for you guys, and so if you want to give me any charts to look at, or if you have any questions about supply and demand, what it is, how it works, how I use it, if you liked it, I don't know, let me go through the chat. Hi everybody. How's it going? Let's play some League, maybe. Makes perfect sense. Thank you. So there can be a sweet spot in the sweet spot, the sweetest spot. Yes, there is. And that's why this whole time you guys have been freaking out about looking at charts. And if you know about supply and demand and use this theory about buyers and sellers, right, it all makes sense. Because the only way the price can move is if people agree that I'm going to buy it for this price. So, Jeremy, less touches the demand supply zone, the stronger the zone, because that means the zone still has point. Yes, again, back to the idea that there's going to be people waiting in those zones to have their orders filled. Every time it's into those zones, there's going to be less people there with orders waiting, so the zone becomes weaker. Can I chart SPY? Yes, I can chart SPY. I've already charted SPY. Check it out. So to chart SPY, I use the futures because it shows you the overnight price action too, where the regular SPY chart, it has all the gaps. and we don't want to deal with the gaps. We want to see the full bang, even overnight, because sometimes that's when in SPY, that's when the reversals and stuff happen overnight. So you got to keep an eye for that too. So look, RST right now, look, I haven't even looked at it this whole time. It's looking pretty good. So everybody that was freaking out about RST earlier, yes, you know who you are. Off the box. Okay? Sorry. SPY. This green box. This has been our demand zone for this week. Where did I find it from? Okay. Check this out. See this? Chop, 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 chop. Gets down here and then just goes insane to 327. That's your sweet spot. Right there. See this? So when is that? 720. So when was that? 11 days ago. So that candle right here, this last red candle before it goes pa-ching, that's what you want. So if I zoom this out to the 4 hour, it should probably line up. So I took this red candle right here, yeah, or these two red candles, just to give myself a little more room, right, just to be a little bit safer. And to show you how I do the box, ready? I'm going to show you how I do the box. So delete the box. So in Thinkorswim, you see this drawings tool? Click the drawing tool, go in here and go to rectangle. So now I'm going to find the candle that I'm looking for. So again, what was the candle I'm looking for? You see this chop, 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 chop. Last red candle, all of a sudden it's all the way up here. Alright? So this guy is our candle. So to get him, all I gotta do is zoom in. Alright? Here he is. Right there. So I'm going to click the bottom, and I'm going to click the top. Or not click the top. I'm just going to drag. Sorry. Restart. Ignore the first part. Click the bottom. Move your mouse to the top of the candle. Drag your mouse to the right till it forms a box. And then stop. Click. Now right click the box. Edit. Okay? Name the box. So this is 4 hour, right? So I'm going to call this 4 hour demand. Okay? Now, this is the next important step. On this bottom right point here, just drag it all the way out. So what I like to do is just go like this. Change the 7 to 831. Right? Now, next. Since we're talking demand, green. Easy to remember. Go in, click green, more. Next. This HSV thing is what allows it to be transparent so that the green candles don't get completely, greened out. And then you can't see them. So, you click HSV, and then you take the transparency and you put it up to like 75. So what that's going to give you is like a lightly shaded green box that extends all the way out into the future, forever. And now, that's my demand box. So what I should expect is, after this major rally, when the selling comes in, screw all the noise. Anything off of this swing high that's not in this demand zone is a perfect area to go short if you're not already. Otherwise, don't touch it. Because here is where you're going to see all the consolidation and the fake breakout and then come back down. You see this? This zone is the death zone for options traders. You don't want to be in this death zone. Never ever trade contracts here. You will lose. You want to buy here, sell here, sell here, buy here. Puts, calls, puts, calls, puts, calls, puts, calls. It is really that simple. Okay, what if SPY broke this demand zone? Where do we go next? Do you see this? Chop, chop, chop. How about here? Chop, chop, chop. Boom, rally. Here's one. And right underneath it is another one. And I checked them out actually, and they line up with the 100 and the 200 MAs. So, pretty interesting thought. And your supply zone's up here, because this is your last green candle mega one right here. This last green baby boy and this one, they missed them. It sucks to be these guys, right? Doesn't it suck? Like when you see a wick like this, it's like SPY was 328. It could have sold SPY for 328 and now it's over here. Oh, big fail. Okay. SPY. Let's beat the institutions. I agree. What indicator puts those arrows in toss? TTM Scalper is the name of it. Look it up. I will type it in the chat. TTM Scalper. Okay. So we can play SE puts till the green zone. Exactly. You literally, your exit for SE puts would be the tippy top of the green zone. So you want to get out here 110, 111, and to be safe, right, set your exit at 112. So that way, you know, if it just misses it, you're not like completely screwed. PayPal. PayPal. Oh, this is easy. I already see it. Look. 4-hour chart. Chop, chop, chop. Last green candle. Super tight. Whoop. Oh, man, I missed it. PayPal is gone. How sad. This chop right here. Okay. Ready? Time to draw the demand zone. So I'm going to zoom into this bad boy. Right here. It's this after hours candle. Oh, it's the worst when it's after hours. I feel the pain. And look, the cool part about it is you should know if you're drawing it right. Because look, this candle, when I draw the box over, it lines up exactly with the very, very bottom, which is the open of this candle. What a coincidence. Paching. Box. Edit. So your buy zone on PayPal that they're waiting to buy in is 176, 179-ish. So the way that this is different than support and resistance, right? I'm sure this is a question. So support and resistance is, so resistance is an actual price level, right? Like it's an actual number. So that is the level that the stock fails to break above. So like resistance on RST is the all-time high at $28 because that is where it's failed to break above, right? And support is, you know, where the horizontal line on the chart, that's a price line. These zones, supply and demand zones, have nothing to do with support and resistance. Well, they do kind of, but it means where like this is where you should expect support to kick in and like kick in hard, because guess who's buying down here? The institutions, right? Again, back to the theory. Retail's not buying down here. Institutions are buying down here. The retail that's getting scared that this is going to drop down even more and they're buying puts here and are like, oh, it's going to go down more, are actually feeding the institutions profits. Back to this. Green box. 176, 179. Okay. Edit. 830. So now, where is my supply zone? I see it again. Look at this giant wick. Enormous. 197 to 193. Here. So this last green candle plus the rest of this wick, because it did get here, so there are people here, right? So this last green candle plus the wick and the cross, supply zone. So there are people waiting up here all the way to down here and down here and over here. So PayPal is sitting in this supply zone right now. What you want to see if you're bullish, right? So if you have calls on PayPal, what you need to see right now is this box hold, start to form green candles and not red, and go up and out above here, right? In the same way that you would draw a resistance line here and say it broke resistance, right? Same thing, except now you've got yourself a little leeway down here. So break resistance, same thing as break the box. Supply zone there. That's what I see on PayPal. And then your next demand zone would be down here after this chop and this rally. So this last red candle, 169 to 172. Cool. Next. And that's the best thing about this, guys. You don't have to know anything about what chart you're looking at. Alright, I could really pull up any one of your charts and immediately tell you where people are waiting to get filled and where those support and resistance is, and I don't have to think twice. You bought more ST at the dip. See, now you will know when to buy the dip, because if it's dipping, right? Church and Dwight, perfect example. Church and Dwight coming back from the grave. Thank you very much. You need to buy these dips. You don't want to sell these dips. You want to buy these dips. This is, look, retail, institutions. Retail, institutions and retail. Flat. See? This is continuing to inch its way up here to my sell order. Please. Just for fun, Tesla. Ugh. Can it be used with other candles and... Oh, wait, I skipped this one. Sorry. Have I made YouTube videos? No. I don't know. New York. Can it be used with candles other than Heikin Ashi? Yes. But I use Heikin Ashi because it's easier to see. Heikin Ashi candles, if you don't know what they are, look them up. They eliminate price noise. So, if the candle is majority bullish, and it's like going up and down, and it would show up as a red candle, but there's more bullish price action, it shows up as green instead. So it's easier to spot trends that way. When the candle hits, when do you know it hits your zone? When it's moving. What? When the candle hits, when do you know it hits your zone as it's moving? I don't understand that question mark. You're going to have to rephrase that. Apple. Okay, so see, Apple's hitting all new all-time highs, isn't it? So you can't give it a supply zone necessarily, except for where it's already been. And considering it's continuing to just go up and up and up, Best way to figure out that would be to do Fibonacci retracement. And you can do that here too. Drawing tools, percent, Fibonacci retracements. That's how you figure that out. But if you want to see Apple that I had before, this was my demand zone here from 350 to 370, 368, and then the supply zone was here from 388 to 400. So if you were playing Apple before in this range, you were making a lot of money. Put Apple anywhere near 400, buy Apple anywhere near 365. Good. Next. See, like, now you guys see, you guys are gonna throw me every chart in the book now. I know you guys are all gonna DM me later and be like, can you chart this, can you chart that? No, you chart it, you do it, practice, supply and demand. I'll tell you if you're right, I'll tell you how to make it better, but you do it, because I'm not doing it for you. I will do it for you here, but I will not do it for you, period. Okay? Cool. KO. Let's do it. Oof. That looks hideous. Alright. You're getting close to here. Here's your demand zone. How did I find that so quick? There's one here, and there's another here. Why? Rally. Rally. I know it's kind of hard to see on my YouTube, but if you go into the actual chart, right, you'll be able to see that it consolidated around here, and then, so this is what? Last Monday, and then it had its first run up. And then last Tuesday, it had another consolidation. It based out off of that run up and then made another one. So you got a double demand zone going on over there. So check this out. And the thing is, this becomes a lot easier to spot now. When I'm looking at the chart and I'm just sitting back in my chair and I see this like pulling back, my instant thought is like, oh, it's gonna over here. This is the sweet spot. Oh, RST, come on, baby, let's go. Let's get it, printer. All right, sorry. Last candle. Here. This is your demand zone. Let's try and capture all of it. Yeah, right. That. This. 45 to 46. 45.75 to 46.30. Let's be precise. That's your first demand zone. Then there's another one up here. This bad boy. And it's really tight. Look at how small it is. But it's still valid. 47 to 47.18. That's like a, yeah. So what is it at now? 46.88. So it broke this one. Now it's gonna come over here. 47. No, 46.30. That would be the next stop on this bad boy. Cool. Next. Moderna. Alright, I'm running out of time, so I'm gonna have to make this quick. I'm gonna just look at it. I'm not gonna do the boxes again. I'm just gonna look from my eye, and I'm gonna tell you. Here. Chop, chop, chop. Bam. 71. 71, buy it. Go short here. 83. Next stop. There. 90. than 100. So it does line up with resistance, but when you do the box, it gives you more accurate. I love you. Anyway. Kodak. It's just, I don't even need to look at it. It's gonna die. It's so stupid. KODK? Really? Come on, what is this? Do they do crypto? Do they make drugs? Do they do crypto and drugs? Are they going to make drugs and then sell them via Bitcoin? What's going on with this? Do I really need to Who asked this? Mark? Alright, Mark. Just for you. Here. $10 to 11. That's the next stop. This thing is dead toast. Next. DraftKings, my favorite. Oh, it died again. This hurts my soul. Not down here again. 32. If not, then, you know, back to 27. Resistance here. This box. Right here. This last consolidation and then drop. There. And then you have another one here now, which really sucks. 35. Ouch. Downtrend. Because the bad news with the MLB. Uh-oh. Demand box charting, what is the time frame you use? Again, I like it most on the 4-hour and the 1-hour because that is your baseline. So if you remember, I'm doing this on the 4-hour and the 1-hour, and then I confirm it on my 5-minute, which is what I trade off of, like my day trades and stuff. So my day trade should line up with my hourly and my 4-hourly, like supply and demand. So again, if you go to, what did I have marked? RST. Every time RST is coming near this box, it's getting rejected. Every time RST is coming into this box, find support somewhere in this box. So now that it's out of the box again for the second day in a row, it's probably coming back here next. 27.47. So good entry for Matt. Hip hip hooray. Shell? Ugh. Why is everybody about electric vehicles? I like them, but there's too many of them though. Can't all be Tesla, right? There can only be one Highlander. Okay, I need to not be on this chart. I need to be on this chart. Oof. Where is this going? This wants to come here. Did it do it already? No. Does it have another support somewhere? Maybe. So if you can't find it on the 4-hour, right? If it's not really clear, because this one I can't really tell. So I'm going to go to the 1-hour now and see if I see a more clear movement somewhere. Ugh, this is annoying. Now I have to do this. So I just made it longer so I could see more days. Here. It hasn't come back there yet. It's trying to. I think it's on its way. That's where it wants to go. What is that? I can't see it. There. And the green arrow is also confirmation, like that's the last buy candle. Before. So what is that? 1682 to 1791. So you got another dollar left to go. It's getting there. That's a good long though. You know, now you can go long on that and not be worried, because your stop loss is literally at like 1681. And the whole point of this, guys, again, is to maximize your risk to reward. That's the point of the strategy. Supply and demand maximizes your risk to reward. I'm risking 1 point to the downside to make 20 points on the upside. It's a no-brainer. 1 point, I get stopped out. 20 points, potential return. Easy money. On that note, guys, I think I'm going to call it a stream. It's been absolutely real. Market moves familia. Buenos dias. Enjoy your weekend. Happy Friday. Party it up. Do something fun. Have a drink. Maybe a couple. Celebrate the wins if you got them this week. If not, what I want you to do is go back, watch this video, redo those charts that you took this week with supply and demand strategy with those boxes, and see if you were trading in that dead zone, or see if you could have got a better entry down where the demand zone was, or how you could have waited. And in the same token, guys, last thought, emotions are going to kill you, right? The more that you continue to sit there and worry on every pullback, on every reversal, on every this, on every that, you're a slave to the chart, you're going to lose money that way. If you want to make money, you want to keep making money, this is the way to do it. Alright, guys, have a good one. See you guys soon. Keep it real.